Few segments in the Indian equity market generate as much excitement and debate as small cap stocks. Over the past few years, small cap companies have delivered extraordinary returns, turning many relative unknown businesses into investor favorites. Yet, they have also remained one of the most volatile corners of the market, often witnessing sharp corrections whenever sentiment turns cautious. In 2026, that debate has once again come into focus. While India's long-term growth story remains intact, investors continue to navigate a market environment shaped by multiple crosscurrents. Global trade developments, geopolitical uncertainties, fluctuating commodity prices, changing interest rate expectations, and foreign investor activity have all contributed to periodic bouts of volatility across equity markets. And when volatility rises, small cap stocks are usually among the first segments to feel the impact. Unlike large cap companies that benefit from stronger balance sheets, wider analyst coverage, and greater institutional ownership, small cap businesses tend to react more sharply to changes in liquidity, investor sentiment, and economic expectations. This has naturally led many investors to ask a crucial question: should one continue allocating money to small cap funds amid this market uncertainty, or is it better to wait on the sideline until valuations become more comfortable? The answer may not be as straightforward as it appears, because despite the short-term volatility, the structural case for small cap investing remains compelling. Hello investors and welcome back to the Equitymaster channel. I am Mitali Toke, research analyst here to simplify mutual fund investing and guide you on a smarter wealth creation journey. India's growth journey continues to be driven by themes such as manufacturing expansion, infrastructure development, formalization of the economy, rising domestic consumption, financialization, and increasing industrial competitiveness. Many of the companies participating in these trends are still relatively small today but have the potential to evolve into tomorrow's mid-cap and large-cap businesses. Historically, some of the most successful wealth-creating companies in India have emerged from this segment. However, investing in small caps is not merely about chasing the next multi-bagger opportunity. In the current environment, stock selection has become increasingly important. Fund managers are focusing more on business quality, earnings visibility, balance sheet strength, cash flow generation, and management execution rather than simply riding momentum-driven rallies. This makes the role of mutual funds particularly relevant for investors looking to participate in the segment without taking concentrated stock-specific risks. So, which small cap mutual funds have managed to stand out through their portfolio strategy, investment process, and long-term performance? In this video, we'll analyze 3 of the most popular small cap mutual funds in India and understand what makes them unique in the current market environment. First is the Nippon India Small Cap Fund. It is one of the oldest and largest schemes in the category. What differentiates the fund is its highly diversified approach to small cap investing. Rather than relying on a few concentrated bets, the portfolio is spread across multiple sectors including capital goods, industrials, manufacturing, and financial services. The fund currently has exposure to companies such as HDFC Bank, MCX, BHEL, TD Power Systems, and Apar Industries. From a performance perspective, the fund has delivered over 30.6% CAGR over the last 5 years and over 22% CAGR over the last decade, outperforming both the category average and benchmark over longer periods. For investors seeking a proven long-term performer with a diversified portfolio approach, Nippon India Small Cap Fund continues to remain a notable name in the category. Second is the Bandhan Small Cap Fund. It has emerged as one of the strongest performers in recent years. The fund focuses on identifying businesses earlier in their growth cycle rather than chasing market momentum. Its portfolio reflects exposure to themes such as housing demand, domestic consumption, financial services, and credit growth. Among the 3 funds analyzed, Bandhan Small Cap Fund has delivered the strongest recent performance with a 3-year CAGR of 31.73% and a 5-year CAGR of 30.41%. What is particularly noteworthy is its superior risk-adjusted return profile, reflected in the highest Sharpe and Sortino ratios among the funds considered. For investors looking for a relatively aggressive growth-oriented strategy, Bandhan Small Cap Fund deserves attention. Third is the HSBC Small Cap Fund. It follows a research-driven and quality-focused investment approach. Rather than chasing speculative opportunities, the fund emphasizes strong balance sheets, sustainable earnings, growth, and management quality. Its portfolio includes companies such as MTAR Technologies, PNB Housing Finance, GE Vernova T&D India, Karur Vyas Bank, and Apar Industries. The fund has generated 28.15% CAGR over the past 5 years and 20.05 CAGR over the 10 years, comfortably outperforming category average over longer periods. For investors who prioritize business quality and a disciplined investment framework, HSBC Small Cap Fund presents an interesting proposition. Now, to conclude, which of these three funds is the best? The answer depends on your investment style. If you prefer a larger and diversified portfolio with long-term track record, Nippon India Small Cap Fund stands out. If you are seeking stronger recent performance and superior risk-adjusted returns, Bandhan Small Cap Fund deserves consideration. And if you prefer a research-driven quality investing approach, HSBC Small Cap Fund offers a differentiated strategy. The larger takeaway is this: small cap investing is not about the next 6 months. It's about identifying tomorrow's potential market leaders and giving them enough time to compound. That's why investors should approach this category with a 7 to 10 year investment horizon and the ability to withstand volatility along the way. So if you found this video helpful, like, share and subscribe to our channel. Invest wisely, happy investing. The securities quoted are for illustration only and are not recommendatory. Past performance is not an indicator of future returns. This video is for information purpose and does not constitute any kind of investment advice or a recommendation to buy, hold, sell a fund. Returns mentioned herein are in no way a guarantee or a promise of future returns. As an investor, you need to pick the right fund to meet your financial goals. If you are not sure about your risk appetite, do consult your investment consultant or advisor.